Good morning. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. I'd like to talk about the equity markets this morning. Thus far over the last 4 weeks, the S&P and the NASDAQ have pretty much been moving sideways, not making much progress. And a little bit problematic in this whole theme is that we've had a lot of distribution days. We have 7 such days on the NASDAQ. And what a distribution day is, where the index sells off on greater volume than the day before, ends up in the negative. And of course you can look at stall days, which are also forms of distribution. That's when the volume picks up but the index refuses to make any further progress. And what that's a signal of is institutional selling, meaning the big money's selling into the rallies. And so we kind of have this sideways moving market. But on the other hand, we haven't crashed. I mean, all these indexes are within 1% of their highs. So if you're an intermediate short-term speculator, now's the time probably not to get too aggressive. The longer-term investor may get a little bit more aggressive here, but you just need to be aware of this, that when you have 7 days of selling, this usually precedes a market downturn, and that doesn't bode well. But again, on the other hand, of course this stuff's never easy, is you have growth stocks that continue to hit new highs and keep moving higher. All the earnings gap ups, a lot of the stocks continue to make new highs. So this is a positive for the market as well. So it's sort of have a little bit of struggle here. The market's at an inflection point. Maybe by the end of the week we'll get a signal as to which way the market really wants to go. Now, one notable thing is I always talk about the ETF sectors. So you have the financials that are slightly off their highs, the consumer discretionary off their highs a little bit, same with the technologies. But actually you have the materials sector, the XLB, is trying to take out its 52-week highs, and we'll see if it can do it today. And what's interesting about that is it's moving probably due to news out of China. Last week we got Chinese industrial production came in at 9.7%, much higher than expected. We also saw retail sales in July in China come in at over 13%. And last night we got news that bank lending is surging in China. So all these are positive stimuluses for China. And so you're seeing sectors related to China starting to move. So that's the materials sector. And so you had breakouts in stocks like Nucor last week. Freeport-McMoRan's working its way off the bottom, Tenaris Steel. So all of these are related to China stories, so you might want to take a look at some of those. Now, also, you might want to take a look at a lot of the Chinese ADRs. There's a lot of Chinese stocks that are hitting new highs, and those are stocks like Qihu, YY, Mindray Medical. There's a whole bunch of those. You can take a look at Michael Kors. So if you're going to play in this market, you want to give that a look. And it may be possible that China is the sort of little stimulus that gets us out of the sideways trading range, and that's to be seen. So, as always, let price and volume be your guide. Don't get too aggressive here. There is a lot of selling pressure in the market going on. You can nibble at things, but let's wait a few days and let's see how the market plays out. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Have a great trading day.